Let's analyze together the highest dividend yield stocks of the S&P 500.
Let's go. We are talking about more than 12% dividend yield, 10%, and the last one also 10%. Very interesting. We're going to start with Pioneer Natural Resources Company, ticker PXD. First of all, let's comment that we are using the adjusted data for dividends chart. So you can see this is different because this type of chart includes the percentage of the dividend in the price. So let's start with PXD. Very interesting trading pattern right now. This parallel channel right here.
Yeah, actually, what we're gonna say, we have the upcoming earnings in 5 days, so very important what's gonna happen next. So I would say that, when you are buying a stock for the long term, it's not like a very good idea to buy just 5 days before the upcoming earnings. It's better to wait and see the financial results, and then you can analyze the last quarter, and then you can act accordingly.
Yeah, exactly. This tends to be like a volatility period when you see that kind of earnings, and also it seems like we are at the middle of this trading channel right here, more or less around that area. So in my opinion, from technical analysis perspective, at least for the long term, this isn't the optimal level to start thinking about buying. You could see that a very good opportunity was right here at this lower level because we had this previous support around 180, and also when we saw this breakout happening right here, this was like a more secure entry. At the first breakout was more aggressive, but it could be also like a good entry right here. But right now I think we are more close to the higher level than to the lower one, so more risk in my opinion right here.
And what's happening with the fundamentals? Because right now you may say, okay, but it doesn't matter if the fundamentals are better in the next quarter. You can buy it, and maybe it's true. So let's take a look at the fundamentals and see how it's been, evolving during the last quarter. So what we could clearly see is like it's not good. I mean, we can see that the second quarter of 2022 was the best one, and then we can clearly see this decline. And this decline is going to continue. So it doesn't look good, even though the dividend is 12%. What happened in the past in other stocks with this decline in the revenue is that they reduce the dividend yield. So in the end, you may make like 12%. You're thinking about you're gonna make a lot of money in this particular stock for the dividend, but in the end, if they reduce the dividend, you're gonna lose performance, and also if the stock is going down, you're gonna even lose more.
Yeah, that's the thing with dividends, right now it's 12%, even more, but in the future it doesn't mean that it will continue like this. So you have to take that also into account. I think that's key, and that's something that you don't see in other videos about dividend stocks. They only mention the actual dividend, the current one, and then they don't mention that it could change. So take that into account, apply technical analysis, follow risk management, and also try to diversify. So that's why we're going to analyze the next stock.
Yeah, and remember, guys, just to end with this stock, the downturns that we suffered in the past, minus 85 in 2009, minus 80% in 2016. So this is why you have to be cases with dividend yield stocks,
Yeah. Yeah, exactly. Minus 80%. It doesn't matter the dividend that you have.
Exactly. So let's take a look at the next one. We have CTRA Energy. So very interesting with this stock. Maybe we have a different technical analysis right here. We can clearly see that triangle that we were watching right now in the last couple of in the last 6 months or so.
Yeah, even I think it will continue for this year. So 1 year trading pattern, it's very, very strong, 1 year triangle. So when we see the breakout in either direction, I think the movement is going to be huge. Also, we have the earnings. Maybe we have them around May. Yeah, so very interesting. Also, we have a lot of volatility upcoming right here. Also, the earnings were going higher for the third one, but then it started to go lower, and this estimate is also lower than the previous one. And we are watching this with the price action. This triangle is going lower each month that it's trading, but also you never know. So in my opinion, I would wait to see a breakout on either directions of this trading triangle, and then from there I would act.
Yeah, remember, we analyze again the fundamentals, the last quarters, again a decline, in the revenue. So it doesn't look good as well. I think it's pretty similar actually to Pioneer in terms of trend, because it's in the middle of nowhere, and then you can see that clearly in the past, in the weekly chart, it's like we have like downtrends of similar performance, you know, minus 60, 65, minus a lot of volatility with this type of stock. So you don't want to make the mistake of buying a stock for the dividend and end up like losing 50% for that.
Yeah, exactly. And when you can buy at the lower possible price, as you mentioned in this case, you know, you had a downturn of minus 64%. Imagine buying at those prices. You get the highest dividend and also the highest uptrend. That's key, you know, for dividend traders, like dividend investors also. Like buying at the lowest possible price in order to get the benefit of the dividend, but also of the price going higher.
You don't want to miss the opportunity because you may think that the stock is going higher. You can buy at $22 per share. I think it's a fair price at this particular trend that we are experiencing right now. But yeah, if it goes below, you can buy at a better price. So remember that these stocks, as long as they perform well in the long term, what I mean well is like they at least are in positive territory in terms of net revenue.
Mm-hmm.
It will be okay, you know. You can add more positions, and in the end, you will be like making huge performance for the long term. Because if you go to the monthly chart, look at that, you know. If you start buying this stock in 1999, the performance is absolutely huge. We are talking about more than 3,000%.
Yeah, exactly. With Pioneer, we had a very similar one, but that's why sometimes you have to take a look at the long term, because that downturn of minus 64%. If you take a look at the long term time frame of monthly chart, it's very different. You know, it's not the same as if you are trading this just as a swing trader. So keep that into account. Also, let's continue with the last one.
Last one, DIVIDEND Energy.
DVN. Yeah, exactly. Very interesting. Also, in this case, we have already the last quarter was like with a negative surprise, but taking a look at the price action is very, very similar to the previous ones. We are trading like sideways, but going a little bit lower, in my opinion.
Yeah, what worries me a lot is the huge downtrend that started in 2008 and that finished in the March crisis in 2020. You know, very interesting. But we're talking about minus 96% over the last 12 years. I think this is something that you have to worry about with this stock. You know, the volatility that it has is too much. You know, but the rebound has been crazy. I mean, I saw this in technology stocks, but not in energy stocks. This is weird, you know?
Yeah, exactly. This is a huge crisis, as you mentioned. We're talking that the price was trading around $90 more or less, and it went down to 3.70. So huge crash right there. But also the opportunity, you know, that the investors had who were buying right there. That's something that you have to take into account. You know, a lot of people is losing money, but another bunch of people is making huge profits. That's trading, that's investing. So that's why we always recommend to be patient, you know, to take a look and wait for the best possible opportunities, because if you are patient, you can catch them right there. It's not the same buying at $50 and seeing the price going lower to $4 than trying to act with a trading plan, thinking in the long term, and then buying maybe at 50, closing out because you see like the scenario isn't optimal, and then buying again at $4 and catching that uptrend of more than 1,000%. That's something that you have to take into account.
So similar to the other two stocks that we analyzed, I would say the breakouts are very important for the long term. You know, look at what happened right back here in June 2020, you know, until October 2020. It was like trading, we had some sort of downtrend, and then we saw a breakout and the stock skyrocketed. So maybe it could happen the same here. If that happens, that will be a buy, you know, for the long term. But remember, guys, this is a very risky situation. We are in the middle of maybe a recession. I don't know. It's not happening yet, but it could happen anytime in 2023. So and that's what I'm gonna say is like, don't put all your money into one egg.
Yeah, exactly. And also don't buy it just because the dividend is very high. Obviously, this is a good opportunity. Plus 10% dividend yield with a stock that is making profits, the earnings are good, is obviously something that could catch your attention. But also don't forget to take a look at the long technical analysis, and also to the short-term chart, because if you go to the 1 hour chart right here, you can see that the price is moving a lot, and you can have plenty of opportunities even for swing traders or intraday traders. So maybe not everything is just in the long term. You can take partials, make multiple entries, and in that way diversify also.
So thank you very much, guys. We have a video on the right, and remember to subscribe.
Welcome to Trading HD. Have a nice weekend, and thank you. We love you.